Welcome traders, let's look at XAUUSD gold. Now on gold there has been actually change in structure in the past week, so what we need to do is actually go and redo the analysis, and this is what we're looking at. So we're looking at the monthly time frame, and what we can do here is that market is actually creating a W kind of structure, which basically means that at the completion of W pattern we expect market to come back down. So we have a bearish bias just to start with, because we have this W pattern which is already there. Now we can actually draw our Fibonacci based on few structures that we have. One is right there, other one is right there, and the third one is right there. So what we need to do is actually investigate which one is the right one for us to give us Fibonacci, best Fibonacci confluences. So I'll start with this one because this is the closest one right now to the price, and if I draw this one, what I can see that market has come to 38.2. Now that actually tells me that market is expected to come very close to 78.6. So if I draw a line right there, I can expect market to actually come there and show me a reaction. Now if you see, this is the reaction that we got around there, and now what we can do is, because the market has gone above that, we can expect market to actually respect other W pattern which we have. Now you'll see that market is actually again kind of right there at 78.6, and while it is touching 38.2. So ideally from this to this place, this is the zone of high probability of reversal, so we expect market to actually come back down. However, one more thing which is left around here is actually Fibonacci extension that we draw, which is going to coincide with 161.8 over 127.27. Right, so this is what we see right there. We have this 261.8 right there, and then we have 272 point right there. So if I draw Fibonacci, if I draw this confluence zone and change the color of it, this is where we are right now. So having said that, market can actually go up to 1786, because if it wants to actually check that 261.8, then that is also a possibility. Now what we can also do is, because there is another structure right there, we can have Fibonacci extension on that to see what we have. We can see that market has come to 261.8 lining up with 78.6, and that also gives us a very good opportunity, very good actually Fibonacci confluence. So we are right there in the high probability confluence zone. However, market may try to go and test the higher level of this zone. So what we can do here is, let me actually put the price level which is there on this zone, so that we can actually clearly see when we go to the lower time frame. Now on if this is true, what we can see here is that market actually try to fall back down from this point, and you see there it has actually hit the 38.2 level. Now what it is trying to do is actually go back up to test this previous thing, and also to complete the bigger W pattern which is right there. So we should just keep that in mind, that first profit target is already done, and if you remember, we were able to take a couple of short positions and one long positions from here, and those were very profitable positions. Now if I go to the weekly time frame, what do I see here is that we have this W pattern which is actually forming. It is not one of the best W patterns, but nonetheless it is. And what we can expect market to do is actually go back up and try to test this high of the Bollinger Band or something like that. It will try to go and test this previous thing. It usually tries to challenge the previous extreme price on the Bollinger Band, and you can also see that this is extreme price, and now the market actually is trying to challenge that as well. So if I go to the daily time frame, what do we expect? Now we had this consolidation zone right there, which was kind of like a triangle kind of thing, and the market was actually market was trying to stay inside, but last week it found much strength to actually come out of this zone and go upwards. If you remember in my previous analysis which I posted on TradingView, there is a zone where I said that market could actually create a fake breakout, and this very well be a fake breakout. We do not know as of yet until it actually falls back down. However, that zone is also this particular price level where the market is right now. That is also a very good level for kind of like fake breakout. And the reason behind that is, if you look at this particular structure, what it is trying to do is actually create a double top or triple top, you can call it triple top kind of pattern. And you can see that market is actually kind of like creating RSI divergence, as well as the price is actually going higher. The price actually went higher than this one, and actually has closed above this previous close. However, the RSI is actually falling back down. So that also confirms, like, the market is a kind of actually bearish, and this can actually very well be breakout. However, we do not know as of yet until it actually starts to go back down and comes back into this triangle once again. I've taken a couple of positions around here, very small size position size from here, because I can expect market to actually go into this higher levels as well. Now, if that happens and if I get stopped out around here, then I will plan for another short, because our bias on gold is bearish because of the monthly time frame, because of this entire zone. Now, it does not matter whether we actually go short from here or from here. All we have to do is basically manage the trade and manage our trade size properly. Right, so now what we expect here is, if market can actually start to move back down, and if that happens, then we can expect that this was a fake breakout, and we can expect market to actually come back down to at least this level of 1634, or maybe even lower than that. Now, if you look, 1634 is right there, coinciding with the previous midpoint of the M pattern that we had. Like, this is the M pattern that we have, right? So that's also a profit level target. Now, what we can look here is that we are actually looking at a W pattern which has actually formed. So if I take the Fibonacci and draw something like this, what we can expect market to do is actually come to 78.6. Now, if the market has come to 78.6, that means we can expect market to come to 127.2, which is 1756, around that level. So this is the level that we have, and then we can also expect market to come to 1780. So these are the two possibilities that we can have on the bullish side. If the market starts to move upwards, then this will be the first level, and then followed by the second level. If the market starts to move down, then the first level will be around, if we do this, then it's going to be around 1721. And if the market actually goes below 1721, then we can expect market to actually come down back into this triangle, or close to this trend line, like the upper trend line of the triangle, to test it out. Once that has been broken, then only we can actually expect market to actually become bearish. But it will take a lot of strength for market to now actually come back down, break this, come back into this zone, and then break the lower boundary point of this triangle as well. But all the indications at the moment are bearish, and because of the structure that we have, because of this triple top that we are forming, and because of the monthly time frame analysis that we did. So that's my analysis on gold. I hope you enjoyed this. If you did, press the like button, and do not forget to subscribe my channel for future trade setups and trading tips. Thank you.